Markets are navigating a subtle but meaningful shift. Investors are betting on cooling inflation and a Fed pivot, but the real surprise today comes from Washington and Beijing. A fresh trade framework between the US and China is injecting new momentum into global supply chains and potentially rewriting the rules of industrial geopolitics. The US dollar is still slipping, gold is quietly climbing, and emerging markets are starting to look attractive again. But political shocks in Europe and major plays in energy and tech are proving that the road ahead is anything but quiet. Here's your zoom out for June 27, 2025, where I help you see the bigger picture. Today brought with it a major breakthrough in Washington-Beijing trade relations. According to multiple reports, including AP and Reuters, the US and China have finalized a trade framework that eases China's permitting of rare earth minerals and magnets coming to the US. Now, these materials are critical for industries ranging from electric vehicles and smartphones to defense systems and semiconductor production. U.S. Treasury Secretary Scott Bessent emphasized that this agreement came after direct calls between President Trump and Chinese President Xi and was completed following negotiations in Geneva and London. Now, while China retains the right to regulate exports under its domestic laws, the new framework commits to speeding up approvals for qualified shipments. In exchange, the US will roll back certain technology export controls, visa restrictions on Chinese nationals, and other trade measures. Wall Street's futures reacted positively. The Dow and S&P futures climbed 0.4%, while the Nasdaq futures rose 0.5%. Economists also view this accord as lowering geopolitical risk, reducing supply chain bottlenecks, and easing pressure on manufacturers reliant on rare earths. Now, with the US rolling back export restrictions and China reopening a vital flow of strategic minerals, confidence is returning to global high-tech production lines. So what's your zoom out takeaway? This isn't just another deal, it's part of a broader reset. As tariffs war gives way to negotiated flows of strategic materials, trade policy is evolving from confrontation to containment. And in doing so, it's reshaping how global supply chains and nations collaborate. In Nigeria, after years of delay and over $20 billion in investment, Dangote refinery, Africa's largest, has started exporting refined fuel, marking a turning point in the continent's industrial story. Now, the refinery has just shipped its first cargoes of jet fuel and diesel to Europe, according to a Reuters report. It's a symbolic and strategic milestone, not just for Nigeria, but for the continent. For decades, Nigeria has been known as a crude exporter that paradoxically imported most of its refined fuel. Now, with its refinery operational, that dynamic is starting to shift. This first export deal doesn't just supply European markets that are still finding alternatives to Russian fuels, it also signals Nigeria's move up the global value chain. By refining its own crude and exporting finished products, Nigeria stands to reduce fuel import costs, ease pressure on its foreign reserves, and perhaps even stabilize the naira. So what's your zoom out takeaway? Africa's economic power isn't just in its natural resources, it's in what it chooses to do with it. Dangote isn't just selling fuel, he's selling a vision of industrial self-reliance, not just for Nigeria, but for the whole African continent. Over in Asia, South Korea just posted its first trade surplus in 24 months, fueled almost entirely by a roaring comeback in semiconductor exports. According to Channel News Asia, chip exports jumped nearly 40% year over year, driven by global demand for high-performance processors used in AI, cloud computing, and next-gen devices. This rebound is a clear signal that the global tech cycle, particularly around AI infrastructure, is heating up again. South Korea's major chip makers like Samsung and SK Hynix are back in high demand. Their success is also lifting the South Korean won and giving policymakers breathing room after 2 years of trade deficits. So what's your zoom out takeaway from this? Semiconductors are more than just silicon. their strategic leverage. In a world racing toward AI, the countries that supply the brains of that revolution will hold the power. In Europe, the political spotlight is on France, where President Macron's snap election decision may backfire dramatically. With just days to go, the far-right national rally led by Marine Le Pen is leading the polls, and as Bloomberg reports, markets are already reacting. French stocks are sleeping, bond spreads are widening, and the euro is showing signs of stress. Investors are nervous about what a far-right majority could mean for fiscal discipline, European unity, and France's debt outlook. There's also talks of potential clashes with EU rules, increased government spending, and even a credit downgrade if economic populism replaces fiscal prudence. So what's your zoom out takeaway from this? When political tide shifts in a G7 economy, it's not just policy that moves, it's capital. France is testing how much political change the European financial system can absorb. So even if you don't follow politics, you experience the effects through your wallets, your job, your business outlook, or your general sense of economic stability. And in the US, jobless claims ticked up again this week, giving traders more confidence that the Federal Reserve may pivot to rate cuts in September. As reported by Yahoo Finance, the dollar has dropped to an 8-week low, and markets are now pricing in a 70% chance of a rate cut in just a few months. This is more than just a domestic story. A weaker dollar tends to unlock global liquidity, pushing investors toward emerging markets, lifting commodity prices, and even reducing debt service burdens in dollar-indebted economies. Gold, for example, has climbed above $2,370 per ounce, and oil is hovering near $83 per barrel. So what's your zoom out takeaway from this? The Fed doesn't need to cut rates to move the world. Just the hint of a shift can send signals through currency markets, change borrowing costs across continents, and redirect investments from Wall Street's trading floors to emerging cities around the world. Expectations shape reality long before policy does. The idea of something happening can sometimes be more powerful than the reality of it happening. So the bottom line is this. With the US-China deal, we're seeing a shift from tariffs to trade frameworks, with both sides picking carefully what to let go of and what to hold on to. A refinery in Nigeria does not only challenge the old rules of energy trade, it gives Nigeria more control over pricing, supply chains, and its economic destiny. South Korea is showing the upside of a tech boom, but also reminding us what's at stake when a nation leans too heavily in one industry. When demand returns, the economy surges, but when it fades, the fallout can be just as sharp. Now, France is also proof that politics and markets are never truly separate. The US dollar is also reminding us that money moves on expectation, not just policy. So when the world zooms in on the headlines, I zoom out so you can see the bigger picture. Which of today's development shifts your perspective? Trade flows from China, energy in Africa, AI chips in Korea, or politics in France? Drop your take in the comments. And if this helped make sense of the headlines, hit subscribe. My name remains Eniola Lunge,